Is inflation eating away at your purchasing power? Instead of just fighting it, smart investors are actually using it as an engine for growth. Today, we uncovering the roadmap to turn the challenges of inflation into winning investment opportunities for 2026. I'm going to show you the key innovation sectors that thrive in this kind of environment. And make sure you stick around until the end for some expert predictions on the future of money itself. So what's the connection between inflation and innovation? It's simple. Inflation forces companies to become more efficient and innovative to protect their profit margins. Innovation steps in to cut waste. That's why sectors offering disruptive solutions, the ones that save time, labor, or energy, tend to outperform the market during inflationary periods. Our focus isn't on commodities, but on the companies that create efficiency through technology. History shows that high inflation often correlates with a surge in performance for these exact kinds of tech stocks. The first sector, and the champion of efficiency, is artificial intelligence and robotics. As wages increase, which is a major driver of inflation, automation becomes more and more economically viable. Companies providing robots and AI solutions to optimize manufacturing, logistics, and customer service are on the front lines of this shift. You want to look for companies that help other businesses reduce their labor costs through automation. In fact, according to industry experts, AI adoption is set for its biggest corporate investment surge in the next 18 months, as companies scramble to stay competitive. The cost of labor is going up, while the cost of deploying a robot is going down. That crossover point is where the opportunity lies. Next up, let's talk about Sector 2, renewable energy and energy efficiency. The cost of energy is a massive inflationary factor we all feel. This is where renewable energy becomes a powerful investment. Investing in solar, wind, and crucially, battery storage technology is essentially a bet against fossil fuel inflation. These innovations offer a long-term, predictable, and consistently decreasing cost for power. This gives you a dual opportunity. You're reinvesting in high-growth companies while also creating a structural hedge against energy inflation in your portfolio. The cost of solar and wind power has been dropping for years, and it's a trend that's set to continue, making these technologies more attractive every single day. The third area is all about the future of money, digital and decentralized finance. Blockchain technology and modern digital payment solutions work by reducing friction, fees, and transaction times. In simple terms, they cut operational costs for both businesses and consumers. In an inflationary world, capital efficiency is absolutely key. So, you should look for companies that are streamlining payments, remittances, and asset management through fintech and blockchain. They are fundamentally providing cheaper, faster financial services compared to the slow and expensive traditional banking system. So, let's look at the predictions from the experts. Analysts predict that pricing power will be the key differentiator for companies in 2026. Innovation companies, with their unique products and services, have the best ability to pass on rising costs to customers without losing them. Here's the main takeaway. Do you want to invest in the company that is simply affected by inflation? Invest in the company that provides the solution to it? When you're researching, pay close attention to profit margins and the pricing power of these companies. Now that's where you'll find the winners. So, how do you actually build this into your portfolio? First, consider a strategic allocation to thematic ETFs or funds that focus specifically on AI and robotics. Second, get some exposure to leading companies in renewable energy infrastructure and, very importantly, battery storage. Third, take a position in disruptive fintechs and solid established blockchain protocols. Remember, inflation is a risk, but it's also a filter that accelerates creative destruction. Your job is to invest in the creators. The future of money is being built right now, and inflation is the catalyst. If you found this deep dive analysis valuable, do me a favor and hit that like button. Don't just fight the system, learn to invest smart with WGA1M Club, your guide to the future of money. Subscribe and hit that notification bell so you don't miss the next wave of opportunities. Thanks for watching.